You have probably used dozens of moving averages before, EMA, SMA, and indicators with fancy names, but they all have the same problem. Set the lengths to 9 or 10 and it is attached to the candles so closely that it reacts to every tiny move. Set it to 100 or 200 and suddenly it looks professional, but it's so far away from the price that by the time it gives a signal, the move is already gone. But today, I'm going to change that and show you an advanced adaptive moving average that automatically changes the length based on market behavior. This indicator also highlights potential long opportunities and the short ones across almost any market and any time frame. So make sure you watch till the end because there is a reason more and more traders are starting to talk about this one every day. To pair this indicator, go to the Indicators tab on your TradingView and search for Auto Length Moving Average plus Trend Signals. Click on it and you can see this ribbon attached to the candles. This moving average is an easy-to-use indicator designed to help traders dynamically adjust their moving average length based on market conditions, which means you don't manually change the length every time, and that makes it far better than a simple moving average or EMA. In this chart, you can see a buy indication. It does so when price stays above the moving average for a reasonable time. A key feature about this indicator is that during a trend, any pullback to the moving average could be a potential trend continuation sign and a possible re-entry into a position. It happens because the moving average line at each point is a strong support and resistance level. For bearish trends, the indicator gives sell indications, which implies there was a momentum shift in that area and candles were below the moving average for some reasonable time. The candles retested the moving average and just continued going lower because dynamic moving average is actually a strong resistance area. There can be consecutive trading opportunities since the price could return and retest the moving average anytime. What really sets this indicator apart is that it is not based on price alone, like most moving averages. It actually combines data from multiple indicators, including RSI, MACD, volume, CCI, and a few others, giving it a much broader view of market conditions in order to adapt more effectively to changing trends. In the indicator settings, under the input section, you will find an option called Dynamic Reset Mode. Here, you can choose between a slope, RSI, MACD, or stochastic. In simple terms, this setting controls how the indicator generates new entry opportunities. For example, if you select a slope, on your chart you can see the table below that it is the best for trend traders, and its main advantage is that entry signals are generated only when there is a significant shift in market momentum, and this alone helps filter out a lot of market noise and can reduce false signals during choppy markets. As a result, the indicator tends to focus on longer-term trading opportunities that align with major trend changes rather than short-term fluctuations. Personally, I've seen good results when using the RSI reset condition. It is effective at spotting trend exhaustion before a potential reversal takes place. As you can see in the table below, this setting is designed more for reversal trading, and it focuses on identifying overbought and oversold market conditions. For example, it can provide sell signals when RSI reaches overbought level, helping traders identify areas where bullish momentum may be losing strength. Now let me show you a trading strategy that combines this indicator with some basic price action concepts. While indicators can be powerful tools, they should never be used in isolation. No indicator can guarantee profitable trades. Proper risk management and position sizing remain essential parts of any successful trading strategy. In this chart, you can see that the indicator has generated a buy signal and the price has already moved above the moving average. However, that doesn't mean we should immediately enter a trade. To find a high probability entry, we can draw a resistance level based on this previous high. When the price breaks above that resistance zone, it signals increasing bullish momentum. At the same time, the area above the moving average is highlighted in green, indicating that the buyers are in control of the market. Following the breakout, price continues to move higher, and along the way, we can see a retest of the moving average, which could have provided a potential opportunity to re-enter or add to a long position while the overall bullish trend remained intact. In this example, the indicator generates a short signal, and the price breaks below the moving average, suggesting a potential shift in momentum. Rather than entering immediately, it is always helpful to look for additional confirmation. As you can see, the break below the moving average occurs at the same time that price moves through a support zone, formed by these previous lows. From a price action perspective, this adds another layer of confirmation to the bearish setup, as it shows that sellers are gaining control and pushing price below a key level. There are plenty of other features with this indicator that I haven't covered in this video, otherwise it would end up being much longer, so feel free to test it for yourself. And let me know in the comments what you think and how it performs in your own trading. Before you leave, I have to tell you that I'm not a financial advisor, and this is not a financial advice. All content, information, and opinions shared in this video are for educational and informational purposes only.